Sell it all, Wall Street said today. Bonds, the Nasdaq, Dow, S&P 500. What exactly happened today? What should you expect next? Let's get right into it.
You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible?
75 basis point in an increase is not something the committee is actively considering.
Hey guys, Tony Denaro here. Welcome back to the channel. I know some of you are shocked and dismayed and surprised by the decline in the market today. Others of you were expecting this. And yesterday, after the FOMC meeting and the press conference where Jerome Powell said that the Fed had no plans to do a 75 basis point hike throughout the rest of this year, the market did rally at the end of the day on Wednesday. But today, Thursday, we woke up to something entirely different. Futures red across the board here in the US, a gap down on all of the major indexes at the market open, and a steady drumbeat down in everything throughout the day, except for a very slight turn up in the indexes at the end of the day. I don't think that really any of the experts on Wall Street know exactly what happened today, but sell it all was the order of the day on Wall Street. And that includes both the bond market and the stock market. Normally, if bonds are going up, stocks are going down, or vice versa. But today, everything was sold off. The Nasdaq tech stocks got hit especially hard, down 5% on the day. The S&P down over 3.5%, and the Dow down over 1,000 points with a 3% sell-off on the Dow. Someone asked me on one of my market live streams this week, either on Tuesday or Wednesday, do I think a market crash is coming? And my answer was very simple. The market crash is already here. If you look at small and mid-cap companies, since November, we've been in a crash. These companies are down 20, 30, 40, 50, some 80%. And the indexes have been propped up by the big companies, and those companies are still waiting to crash. Well, today, these big cap companies finally participated in the crash. When we look at the heat map for the Nasdaq, the largest boxes indicate company size by market cap, and the brightest red boxes indicate the biggest losers of the day. You can see here Facebook, Adobe, Nvidia, AMD, Apple, Amazon, Tesla. All these large market cap companies got absolutely hammered today, and even though these smaller cap companies and the darker boxes did okay on the day, these large cap companies are what took the Nasdaq down today. Looking at the heat map for all US companies, when we see bright red, again, that indicates the major losers of the day. Dark red or gray indicates companies that did not fare as badly today. In the top left, in the finance sector, it was pretty stable. In the top right, consumer non-durables and energy also fared well today, but the brunt of the punishment today was handed out in the middle of the screen on electronics, technology, and retail. So what exactly is going on here, and why the run up yesterday and the run down today? If you regularly tune into my market live streams, I've been saying for many, many weeks, maybe even months, that right now in these market conditions, I am not buying trades on the VIX or options on the indexes because of this type of activity where the market runs up one day and the very next day it heads down the other direction. It is completely unpredictable because Wall Street is trying to make up its mind, and there are just a ton of geopolitical risks going on, not only here in the US, but around the globe. We got China, we got Ukraine, Russia causing also additional destabilization in Europe. Here in the US, we're dealing with inflation and rising interest rates. And bottom line is, Wall Street still does not think that the Fed is taking adequate steps to tame inflation fast enough. On top of the prospect of interest rates going up here in the US for the remainder of the year, we still have inflation not in control. We have supply chain issues. We have COVID going on over there in China, screwing with the supply chain still. We have a tight labor market with wages going up. We have rising energy costs. And I think that Wall Street is concerned that the Fed is not doing enough with these half-point interest rate hikes to get things under control. And they are looking forward to the next couple of quarters coming out of all of these companies across the U.S. dealing with inflation, interest rates, rising wages, energy prices, and on top of that, what is going to happen with consumer spending when we add all of that in? Well, people are going to start spending less money. What does that mean to companies' earnings? It means that the next couple of quarters are likely not to be good. And many companies still have very high historical PE ratios, which means they're overvalued in light of what they are likely to deliver in terms of earnings results in coming quarters. I talk a lot on my channel about overvalued companies, my concerns about that, companies with very high PE ratios. And the reason that I do that is not because I hate these companies. It's because when we get into a season where we're looking at a bear market or a recession, you guys need to be aware that these companies are going to be hit the hardest. The overvalued companies always take the biggest falls. The other companies that are going to be hit in a season like this are the ones that we've already seen get hit, the ones with no earnings, the ones with no way to value the company other than the future. They've already been doled out the punishment. Now we are seeing the companies with the high valuations being brought down to a level that is more acceptable to Wall Street. So am I concerned about what happened with the indexes falling today? No, I'm not at all. We've already seen small and mid-cap companies get hammered. It was just a matter of time before these indexes got taken down a notch as well. Some would say what happened today was completely expected or maybe even necessary for the market to start getting back in control for the next leg up. But we are not out of the woods yet. I do suspect that with this broad sell-off across the market, both in bonds, stocks, and even crypto today, that some institutions and some hedge funds did some house cleaning today to tighten up their margins and raise cash. What happens next? Well, I would advise that you be very careful about listening to anyone who tries to tell you they know what's going to happen next. But we do often see that when pullbacks happen like this, whether it's a 1 day, a 2 day, or a week, there is quite often a temporary bounce back up. And again, I do think that sometime before the end of May, we will get that bounce. It will be a short-term bounce. And I want you to remember that 2022 is going to be a year of patience. And I want you to continue to look for opportunities, always saving some dry powder because we don't know when the absolute bottom is going to be in until we find it. I want to take a minute to remind you that my live streams are moving to a new channel starting Monday, May 9th. That's the market open, market close, evening and weekend interview live streams. All of those will be moving to the new channel that is down in the video description, Tony Denaro Live. Here on this channel, I'll still be posting market and economic analysis, stock deep dives, all sorts of due diligence, talks on crypto, real estate, entrepreneurship, any sort of normal video that I video and then upload. But please hit that link down below in the video description and sub to Tony Denaro Live. And don't forget to hit the alert bell so you don't miss those market live streams. This is all just an effort to improve the YouTube algorithm engagement for the videos that I have here on this channel. I put a lot of work into these videos and I want to make sure that they get the appropriate love from the algo. I am Tony Denaro. I want to thank you for watching. If this is your first time here, don't forget to buy and hold that subscribe button, and I will see you on the next video.